All right, welcome everyone. Welcome to today's live stream, and I'm joined again by, joined with or by. Do you
Bye,
say
I think.
joined by? Yeah, I think by.
Yeah,
All
I
right,
think bye.
Dirk
Yeah.
Hartig from PrimeXBT Academy. How's it going?
Good, good. How is everybody out there? Good to be here again and have our bi-weekly discussion about the markets and everything related trading.
Yeah, it's gonna be a good one. Today we're gonna be talking about some of the mistakes that we've done in our trading careers, and hopefully with that you're gonna be able to hopefully learn what not to do. And yeah, I think that's the main point. Before we go on, I just have to ask you, Germany energy crisis. Like, what's the electricity prices over there? It's quite high, huh?
Yeah, they've surged like by, what did I read yesterday? Like 1,400% or something on the future markets. I'm actually
Yeah.
quite lucky because I was already afraid for my office and my home that my contract would like end this year, but I saw it's still valid for 1 year. So I still get the good prices of around, what is that, like 25 cents per kilowatts hours. And I think the new contracts are something like 80 cents, €1. So it's going to be very
Yeah, I
tough, not
think
only for businesses but also for families that maybe are dependent on those 50 or €100 more or less a month.
yeah, I got a new contract for this winter. I have a contract which is like uh, um, a fixed price during the winter, and it went up 4 times as
Oh,
compared to last
yeah,
winter. It's crazy. I mean, it's
it's
probably going to have
crazy.
energy bills of on a monthly basis towards probably somewhere between 1,000 and
Yeah, yeah.
$1,500 a month. From being at like 300, it's absolutely crazy. And the reason why I'm asking, like, we're not going to be talking about this in today's live stream, but I do think that, like, imagine if it gets much, much worse, that might be like that shock to the system that
Yeah,
drives that, creates that catalyst for the real recession, right? Because,
yeah, yeah.
I mean, I did watch the news, like I did watch on Bloomberg this morning, and they said that Germany, or on average, the whole European Union has reached 80% capacity on their reserves, right? So that's a
Yeah,
good thing, right? But the problem
yeah.
is that it seems that Germany only has like 2 months of reserves.
That's the thing. The reserves. It's not like
Yeah.
they are going to bring you through the whole winter. So it's just for like 2 or 3 months maximum if you are at 100% capacity. So it's really a
Yeah.
problem. And I mean, we are really in Germany, especially. I mean, I can only, of course, talk for Germany here. We're paying the price now for the sleepiness of our industry and politics in the last 20 to 30 years. We used to be leading, for
Oh yeah.
example, in production of the modules for solar energy. But then it was desubsidized in favor for the coal industry because there were more voters, for the politicians. And this is what we are
Yeah.
paying. We're paying the price for that now. But yeah, I mean, let's
Yeah,
see
I mean,
where
they're
that gets
shutting
us.
down they're shutting down nuclear, and now they're forced to start the coal factories, the coal
Yeah.
energy factories again, and without having a proper idea of it seems like they haven't built the infrastructure for renewable
Yeah,
energy
it's
as
it's not
as
it's
they
not
should
only
have,
the energy production itself, it's also the grid. Even if you have
Yeah,
the amount of production by your own that you can do, you don't have the grid to support it. Some
yeah,
homeowners, especially in the south of Germany, that say like, "Hey, I have like solar panels on my roof. I have a big house, I have it full of solar panels, but I cannot feed my energy into the grid because the grid is not capable to store it. So it's wasted."
yeah. It's the same in Sweden. We here in Sweden, they talk about, like, obviously there's an election coming up here in shortly this year, probably a couple of weeks. I don't know. I should probably know that, but they're talking a lot about how the Swedish energies, the grid needs to be able to store more energy, right?
Yeah.
And it's the same problem. Like, we have obviously old technique. Anyway, let's not talk too much about energy crisis. We're probably going to have reasons to talk about the energy crisis going forward in another webinar, or another live stream. I'm thinking maybe next time we do this, we could talk about looking at the S&P 500, do some high top frame analysis, and factor in what's happening. And at that point, maybe we're closer to a colder climate in Europe, and that's when we're going to have problems. All right, so mistakes, and this is going to be like a more of a podcast episode where we basically talk about our mistakes. And I want to start with saying that I think one of the biggest problems that new traders have when they go into the market is they and this is completely normal. It's completely normal, and it's having the wrong expectations, right? You're expecting, because you're on social media, maybe you started trading because you saw some big account on Instagram showing their portfolio, and it's like, you know, an insane increase in gain, and then you go to their profile and they're going to sell you something, right? They might not even be real traders, you know, and you go into the market thinking that you're going to be making the same amount of money. And if they are real traders, they probably traded for 5, 6, 7 years to get to that level. So you go in with the expectations that you're going to be able to make the same amount of money in a short period of time. And then you realize that it's super, super hard. And there's a reason why probably closer to, you know, only 1% of people that try this are going to be consistently profitable. It's like the fail rate is very, very high.
Yeah.
And I think that is a huge problem. And I think also that's the reason why a lot of people fail, you know, because they expect that it's going to be easy and they're going to be making a lot of money, while it's in reality it's super hard, right?
It is, yeah. You know, like I always like to say, trading is a business and you should treat it as one. And it's the same when you are opening a company. You have an idea to open a company, whatever, sell shoes or whatever your product is. You probably also would not just go about and say like, oh, you know, I have this cool product and I'm just going to try to sell it. I'm going to order like or manufacture thousands and thousands of units of this product. Probably you would start with something like analyzing, is the competition for this product? You know, how's the market? How's my margin on my product? How much would marketing cost, and so on and so forth. So basically build a business plan. Yet when it comes to trading, somehow people fail to do that. And of course, it's partly the fault also of the search results you get when you Google something like crypto trading, Forex trading for beginners, or you are on social media, Twitter and so on, and you see all those supposedly successful people out there that supposedly make millions and millions of dollars or euros or whatever by working half an hour per day placing some trades. And yeah, it's not like this because the truth lies deeper. And if you want to analyze really why is it that people are not successful, or why does it take really quite a long time until you can become successful with trading, then it's probably because, if I have to summarize it, because people, most of us are not very good in admitting if they have done something wrong towards themselves. So if we want to go maybe a little bit deeper and not just on the top level and name things precisely, like one of the things I did for a very long time when I was new to trading wrong, and I still catch myself sometimes doing this, is being married to positions. You know, I've put a lot of analysis into a position. I'm like really 100% sure that I nailed the analysis and that asset is going up or down. And when I take the trade, I have a good risk-reward ratio, did all my homework and so on, and it goes against me. And when you automatically get this, yeah, but I'm right, the market is wrong. And no, the market is always right. You are wrong. You missed something, or something happened that was outside of your sphere of influence. Happened, economic news came out or whatever. Like an example, I went long in the S&P 500 last week because I thought we are going to get the rebound to the 200 days moving average up there. And luckily I could place my stop loss there to break even pretty fast. But there was economic news coming out. In this case, it was not really economic news. It was Powell speaking. When was it? I think beginning of the week, actually, it was, no? And then the market really crashed down everywhere because he said some things out there that the stock markets or risk on as it didn't like. So I did everything correctly.
On
but
Friday, right? Jackson
yeah,
Hole,
last
right?
Friday, no?
Mm-hmm.
You're right, yeah.
Yeah.
So I did everything right that I could do right in terms of analysis, but something outside my sphere of influence still happened that I couldn't influence that made the market drops. And luckily I had my stop loss set there. But if I maybe go back 20 years or 24 years, and you have a young Dirk taking a position like this, maybe I wouldn't have put my stop loss. Or maybe I would have thought, no, I'm still right. This is just temporarily going down now. I'm going to add to my position. So I'm marrying myself to the position. And this is like the worst thing you can do. Because if you have a business and one of your product is not selling, you probably never would get the idea of ordering more of that product to try to sell more. You probably would get rid of it from the shelves of your store.
That's a good point. And I believe that we as humans were conditioned to do everything in our power not to feel physical harm or emotional harm. And being wrong, without having the right expectations in trading, being wrong will cause you physical harm, right?
Yeah.
I mean, psychological harm, mental mental harm, and you're going to be feeling obviously not good about that, being wrong, right? So I think that also ties into the having the right mindset and having the right approach. Basically when you're taking a trade, you have to not think in terms of being right or wrong. You just have to look at look at trading as a long-term gains, where you're going to be making small gains over a long period of time, and those small gains will compound into quite a good return. Let's take, for example, let's say you're making 5% a month, right, on your trading account. Now that 5% a month is actually 80% in a year. So you almost double the account in a year if you're making 5% a month. Now, let's be honest, 5% a month on average is very good, right? It's very good. For new traders, you should probably just focus on being above zero. When you start trading, and even being around break even is going to be hard, right? But when you get to the level when you're able to have an average profit of, let's say, somewhere between 3 and 5% a month, you're still going to be like up 50% or 80% in a year. And institutional traders, they would kill for something like that, right?
Absolutely.
And normal return on let's say Wall Street, that's like 20% a year. Like the big hedge fund, if you make 20% a year, you're golden, right? If you make 80, you're a legend, right? So it's important to think about that, making small gains over a longer period of time. I think that's very, very important. Then I'm going to tell you a story of a friend of mine. When I started trading, so I went into crypto in 17. I got my friend interested in crypto, and we were three guys having a Telegram channel where we discussed crypto and different ideas and that sort of stuff. And he found this altcoin, which is called Credits, right? And he saw that it was partnering with MasterCard, right? Or an announcement with MasterCard in that announcement. And he went all in. He's taking all this money and he went all in on Credits, because he realized that this is the future, right? Credits, that altcoin is going to be the future. And I was a little bit ahead of him in my trading experience. So I told him, look, this is risk management and this is how risk management works and all that sort of stuff. And he refused to listen to me. He read everything about the program. He watched everything on YouTube about it. He totally got almost like a cult-like behavior, right? It got to the point where I just stopped trying to help him, right? And he then obviously, it went as it always goes when you go all in on one altcoin. He lost everything. That was a lot of money, right? So he lost everything. And the reason why he lost everything was because when price started going down, remember, this was in, I believe, 2018, like in the middle of the bear market. So you still had altcoins, from that point, they have gone down like 75%, but some altcoins went down 90% more, right?
Yeah.
So at that point, it just kept going down, and he started averaging into that position more and more. And he kept telling himself that it's going to go up at some point, but it never went up. I think they left the product, right? So going all in on altcoins and products, it's just never going to work. And if it does work, you're lucky, and it's going to work once, right?
Yeah.
That's also why I believe, if you have that approach where you risk a lot of money on a product and it works out, you're doomed to fail, because you now think that that sort of trading behavior is positive and it works. You see people, and this is also a problem of, with social media. You see people that have actually uh, come into crypto very early, let's say 2015 or something, and they just held their coins, and they're millionaires because of that, right? But that only really happens once, you know.
Yeah.
So new traders, they come in with that expectation that they're just going to buy an altcoin and it's going to go 100 times the invested money. It just doesn't work like that, right? So
It doesn't. I mean, we don't need to look too far in the past. Also, we just need to have a look at Luna. That is just a couple of months ago. What happened there?
Yeah.
And I mean, if you go over social media, how many stories are out there of people really who lost their life savings and probably lost more than they can afford to lose. Yeah, that's another thing. Don't invest more that you can afford to lose. Always hurts to lose money, of course, but it shouldn't hurt up to the point where you don't know how to get food on the table for your family the next day because you lost that money. Yeah, going all in, definitely. Yeah, please.
I really do hope we can help people to kind of start with a good approach from the beginning of their career, right? So I remember, like, I was on a run before this live stream, and I listened to that the audiobook of Trading in the Zone, and he talked about how the absolute majority of traders, they start with wrong approach, wrong mindset. There's a small group of traders that start from the right approach and the right mindset, and that it's the trader that gets like born into successful trading families, right? Or they start with a mentor, right? A trading mentor. And I really do think that it's kind of a big deal to get a good mentor, or to follow somebody on YouTube, for example, that's actually showing you the real deal, right?
Yeah.
Because if you do study these sort of stuff before you get into trading, I believe that you're already in the top 10%, right? So I believe that it's, the number, like the fail rate number of new traders, day traders, is closer to 99%. And I'm talking about the people that makes it to be consistently profitable. I would say that's about 1%, right? But if you're starting with the right approach, the right expectations, and the right mindset, I do believe you're already at that top 10%, because most people, they just go all in on an altcoin, right?
Yeah, and I think you're in that top percentage, or you have a much higher chance to succeed because you understand one thing. You understand that in order to become a good trader, you're not going to copy what your coach is showing you. Your coach is there to help you to develop your own skill. So, and this is something I see over and over again. The expectation of most beginner traders is, wow, there's this person on the internet that is good in trading. I'm going to just trust him blindly, going to follow his every or her every trade, and then my expectation is that I'll get rich with this. No, a true coach, or a good coach, or a good teacher, helps you to help yourself. So, for example, my goal with this whole Trading Academy project always is that if you've done that long enough, and maybe you take like 2 or 5% of what I try to teach there by heart, that one day you'll be at a level that you don't need me anymore, because you can do everything by yourself. This is, like, for me, so to say, the ultimate goal and the ultimate reward when I get a feedback like this. Hey, I know now how to help myself. I don't need to listen to anybody anymore. And I also have the level of confidence where I stand by my own opinion. I'm not going to overthrow my whole strategy, my system, my opinion, just because some random dude on the internet said something that goes not into the direction of my opinion at that moment.
Yeah, I had I made a couple of points here before the live stream, and one of that point was one of the mistakes that most people do, I believe, and what I did in the beginning as well, is following other people's analysis, right? So
Yeah.
it's a combination of different things here. You have first you have a random approach, right? So what I mean by having a random approach is not having a very clear plan on what to trade and how to trade, and your trading system having a clear trading system, and you're browsing Twitter and Instagram and maybe Facebook or whatever social media, and you're looking for trades and you're looking for reasons to stay in a trade or reasons to get out of a trade with using third party analysis. And it's very important that you do stay independent and work on your own system, kind of isolated from everything else. So you mentioned that you in the PrimeXBT Academy, you're trying to give people the tools to trade independently without having to depend on you. So and it's the same thing I do, right? So in my trading program, which I haven't launched officially yet, but it's coming, right? Is I will basically teach people my system, but with the sole purpose and the goal of them taking that system as a foundation to create something on their own, right? And by following my process of showing them how I create the system from scratch, by adding one indicator, testing that one, adding another one, testing that one, and seeing what really works, they can take that information and create either their completely own system or create a new system based on that one. So it's insanely important that new traders, they learn. When you have learned TA, it's about creating a system completely isolated, completely independent, not relying on anyone else. You have to just sit down at your desk, you shut everything off, and you start working, start developing, start backtesting. Because as soon as you get influenced by another trader, you see a setup and you say, maybe I want to take that setup, you have no idea where that person comes from, what type of system, what the system is based on, his psychological, like his mental state of mind while taking that trade. There's so many variables in a trade setup, it's going to be impossible. So there's a lot of communities out there that has like trade signals, calls, and they're kind of they're marketing it as profitable signals to follow, right? While in reality, every signal that you get from a trading community or Twitter should be a guide. It should be like a market scanner. When you get a setup, you're going to be like, all right, this is a possible setup on their system. Now let's see if it's a setup on my system as well, right? So I think that's a major reason why a lot of people start, also system hopping, right? I think that's
that's the thing. I have a good friend of mine. He used to be a professional poker player, and back then, it was like 15 years ago, 20 years ago. This online poker was like incredibly popular. He was very, very good at it. He had a system that he would play, and he was very successful with it. And no, he did not win every round and cashed out insane money, but over the course of like 1,000, 10,000, 100,000 hands, he was successful. He was earning money, and he would track it on a chart, and you would see the chart really slowly rising, sometimes going down again, because he had his streak where he'd lose money, but he would stick to his system. Now, later on in his life, a couple of years ago, he changed to trading the stock market. So he's specializing on stocks there at the moment, not low volatility, low cap US stocks. And he's there also insanely profitable doing that. And not because he has like the magic system out there, but because he has a very systematic approach. He was used to, from playing poker, doing things in a very systematic way, putting the math, so to say, the statistics in his favor, and then just over the course of 1,000, 10,000, 100,000 poker hands or trades in this case now, he knew math would be on his side. He would earn money with this. And he learned from playing poker that, even if you have those phases where you are losing money, not to doubt his system. And I think this is something a lot of traders struggle with. You just mentioned earlier that beginner traders tend to doubt their system and then change and modify their system once they, end up having a losing streak. And I think this is really a problem once you have developed a system and because you back tested it, that it actually works. It works. Do not, let just streaks where maybe you have like 5, 6, 8, or 10 trades in a row that are not profitable doubt the whole system. This is something I see very often, that once you have those streaks where you lose a little bit of money, people start to doubt the system, which is okay. A certain healthy level of doubt, of course, should always be there, but do not change the complete system. Just because you see like, if I would have added this indicator or treated this indicator as an entry or exit signal, it would have worked out. Yeah, but it doesn't say it's going to work out like this for the next 100 or 1,000 trades. I think this is really, really extremely difficult, and maybe one of the hardest challenges to overcome, really, to trust yourself. Trust yourself, trust your system. Do not let others tell you differently.
Yeah, I think you have such a good point here. I mean, what you're talking about right here is probably the most fundamental thing in trading. It's probably the most important thing in trading. And you took a good example here with a prior poker player who's used to having because in poker you have to have a good risk management and a systematic approach.
Absolutely.
So one way, like I'd like to put it this way: you have to have a systematic approach with random outcomes and consistent results, right?
Yeah, that's a good summary.
Yes, you have a system, right? So you have a system, and you're saying like, I don't know what's going to happen. I have no idea, right? My next trade is completely independent of the previous trade. Like my next trade has nothing to do with my previous trade, has nothing to do with my previous trades, my experience of the previous trade, my feelings based on the previous trade. So my next trade is a completely unique opportunity, right? Completely unique. It has nothing to do with the previous one. It's a random outcome. It's a 50-50 chance. I don't know if it's going to be a winner. I don't know if it's going to be a loser. But if you take all of these opportunities and you line them up, you have 200 trades, you're going to see a pattern. And that pattern is your trading edge. Your trading edge is not visible on the next trade or the previous trade. Your trading edge is only visible by using the law of big numbers. So having a systematic approach, but a systematic approach, but you have to have a probabilistic mindset, right? So you have to. It's weird, it's weird because you have you don't have a random approach. You have a systematic approach, but the results are random results, which in of itself has an edge. So the very important part here is obviously when you're developing your system. I know a lot of people, they neglect the importance of actually testing the system, back testing the system. So they have a general idea of how technical analysis work. They have a general idea of trending markets, maybe break and retest or a breakout setup or whatever, or maybe they have a vague idea of 5 different setups. And when they see something on the chart that might align with one of those setups, they take the trade, right? Yep. But they haven't tested that. And then when they see another trade, so a completely random approach. Now, that's problematic, right? When you use a random approach to get random results, there's no edge, right? So you have to have that systematic approach. So you need to know, you need to back test, you need to have the information of that 100 or 200 trades to know that, is there an edge? Is there an edge here? And that's the way I traded, right? I in the beginning, I just took whatever trade that I thought looked good based on candlestick patterns, or this looks like it's going to be a breakout, so I'm going to be buying, and then it's not a breakout, So next time I'm going to be like, yeah, I'm not going to take the breakout trade.
Yeah, that's the thing. We have like this. In our human brains, our short-term memory is much stronger than our long-term memory. So you continuously have to trick yourself on a psychological level. And this is so different. And believe me, and I mean, I've been doing this for 25 years now. And still up to this point, I step into that trap. And I continuously have to question myself, is this setup what you now want to trade? Is this a setup with a good, what did you call a probabilistic? Yeah, oh, such a difficult word. Sorry. And so is the outcome going to be statistically speaking positive, or do I have information bias? Is my brain seeing the world or filtering information right now because I'm biased? This is something we like to do as humans. We like to read information that is biased into our own opinion. This is such a trap, and really so many things you can do really, really wrong there. Like another thing that I was just thinking of the other day when I talked to a client here of PrimeXBT who was really struggling to, and I was trying to nail down, okay, what angle, where can we start, getting you on track. And for me, the most obvious there was really over leveraging in this case. And this is something I see very often. Just because a platform, for example, offers you a leverage of 1 to 200 on crypto, for example, does not mean that you have to take that leverage. Because even if you're right, then the position just needs to move slightly against you and you're going to be stopped out. Your account is going to be destroyed. And I always like to make the comparison. If we look back to 2008, maybe a couple of you guys still remember financial crisis, Lehman Brothers, who was like the big investment bank going down there. And they were destroyed by a leverage of 1 to 20. And yet here we are as retail traders thinking that we can be successful if we choose a leverage of 1 to 200 for every position. It's a recipe for disaster. So don't overuse leverage. Stick to something like 1 to 1, maybe 1 to 2, maybe maximum 1 to 3 leverage.
Yeah, I don't know if you would agree with this, but like I don't even think about leverage anymore. Like it's not part of my, like I don't even like I know I'm trading on PrimeXBT. By the way, guys, if you want to join PrimeXBT, you can check out the link in the description. There's a promo code where you're going to get a good bonus on deposit as well as reduced fees. So definitely check that out. And by the way, if you want to follow Dirk, he has a channel on YouTube and he's on Twitter. It's PrimeXBT Academy. So definitely check him out. It's a really good content. All right, so leverage.
Yeah, I think you're probably not thinking about leverage because your position decision is different. You come from a risk-reward approach to choose your position size, right?
Yeah, exactly. I mean, I have my risk management strategy is I'm consistent with my risk because I'm trading. Yeah. I'm trading one system, one setup. I've been doing that for a long time, and I know that I'm supposed to be risking 1% per trade. There's a couple of things that might tell me to lower risk if I'm like in two pairs, basically the same setup, but that's a different thing. But I'm basically I know that I'm gonna like 1% of my capital is this dollar amount. This is the dollar amount I'm going to risk on that trade. And then when you have an exchange where it's, I believe it's cross leverage on PrimeXBT, your whole account is leverage, right? So the leverage kind of sorts itself out in the background. So I think crypto traders, because most Forex platforms, right, most legacy traders, they don't have isolated leverage. The normal way of doing it is just having your whole account leverage on cross leverage, like it was back in the day on BitMEX. I think a lot of people would remember that. Mm-hmm. And on in crypto, you have mostly isolated leverage, right? So people ask like, what leverage are you using? And I'm like, I don't know. I don't care. Risking 1% per trade. That's it. So I think people need to switch their perspective on leverage, because leverage doesn't matter. It matters in some cases in specialized approaches, right? And when using it as a risk management tool. But you have to remember, I had a live stream yesterday, and there was this guy talking about like, well, if you're in America, you have 20 times leverage, and in Europe, you can have up to like 100 times leverage, so they'll make more money in Europe. And I'm like, that's not how it works.
Yeah,
it's not how it works. It's going to be the same risk. You're making as much money on a 20 times leverage account as on a 100 times leverage account because you're risking the same gains. It's just that you can use the opportunity to have a smaller account, it's the same.
That's the thing, really. If you trade, let's say, with 100,000 euros or US dollars, and so you want to risk 1% every time, so you're risking $1,000 or euros per trade. Using the leverage in this case means you don't need to have those 100,000 on your trading account. You can also have like 10,000 on your trading account. But the risk approach here is the same as if you have the 100,000. So this is on the account. So this is, in my opinion, how you should approach leverage. Start with something like, okay, I want to risk a maximum of X% of the whole money I'm using for trading, for example. And okay, how much do I need to have on my account that I'm comfortable with this position, that it doesn't get stopped out immediately? You know, of course, it doesn't make sense to have two less. If you want to risk 1,000, only have 1,000 on your account, for example. So that would put things to the extreme of the other. And then, you know, you do all your homework with your risk reward zones. You see like, oh, maybe, you know, I have a risk reward ratio of at least 1.5. So I can earn 1,500 euro by risking 1,000 euro, and so on and so forth. And yeah, like Lip just said, you don't really think about leverage then. And you don't need to do so, in my opinion. So yeah, really kind of a funny quote there from the guy you just mentioned, that you can earn more with a higher leverage. It's weird, yeah. But I understand where he's coming from. I think this is kind of a mind trap a lot of new beginner traders fall into.
Yeah, it's such a big problem. And leverage is also like it's pretty insane that a lot of platforms actually do offer the amount of leverage, but it's like it's only insane if you don't have the experience and the knowledge, and that's what we're trying to do here. We're trying to tell people that, you know, leverage doesn't really matter. All that matters is the amount of money that you're risking on the trade, and that amount of money should be fairly low, and it should be, you know, consistent. I think right. So let's see, do we have anything on this list that we haven't talked about? I think a major thing that kind of made a huge difference for me is knowing that I don't need to trade all the time. I don't need to be in a position all the time, and I'm better off taking fewer trades and fewer positions. So need to be patient and wait for the absolute best setup to form. So I can give you an example here. So last week I took a couple of trades where right before entering that position, I hesitated, and I had a couple of, you know, thoughts in my mind saying, is this really the best thing to do? Should I really enter here, or should I wait for this candle to close? Maybe I should wait for this level to get reclaimed. That is a sign of me not being, you know, having a consistent approach. And that's a sign of me, you know, not being in a balanced state of mind. Because when you're taking a trade and you're in a good state of mind, you should just enter because you feel it's just the right thing to do. It's the setup, setting up, everything looks good. It's a perfect setup. You enter without any hesitation. As soon as you start hesitating and you have a lot of questions and you see signs that it's not being the perfect setup, it's better to wait. Just wait and wait until you feel good about taking that trade and you feel good about risking money on that trade. And if you do that, if you only wait for the perfect setup, you're probably only going to be taking like 10% of the setup that you see, right? So if in the beginning you're taking all the trades, you might be taking, you know, I don't know, let's say you're taking 20 trades in a week, right? But then you start being patient and you start being picky and you only look for the best setups. And let's say that's 10%, you're only then taking 2 trades a week. Now, the magical thing about this is you go from taking 20 trades and you're probably not profitable because you're taking suboptimal trades. And then you go to taking 2 trades and you're profitable, right? So you're working 90% less, basically, you know, and you're making money. I think that's a kind of golden rule in trading. Only trade the obvious, and trade much fewer setups that you think you should be.
I can only always quote my my mentor when I was starting this whole trading adventure. So Sven, if by accident you're watching this, this goes out to you. And he always said to me, Dirk, if you're as a trader not bored 75% of the time of a day, you're doing something wrong. Because he wanted to train me to wait for this one perfect setup. He said it's much better if you have one trade a day or even one trade a week, and this is the trade earning you a lot of money. It's much better than going through the stress of having 20 days trades or 30 or 50. But of course, I understand what the attraction is of trading a lot, especially, and this is also my opinion, why so many beginner traders are attracted to trading those 1 minute or 5 minute charts or even lower time frame. I mean, I think on TradingView you can have like second charts. Every second there's a new candle, so to say, or a new dot on your chart, and it's of course very attractive because it's a lot of action. It satisfies the mind in the same way that probably video games satisfy you. You have a lot of action. You have to press a lot of buttons, back, forth. And when you end up trading 100 times. But like, as you just said, Lib, you're probably not going to earn money with that, because every time you have to go through the spread, every time you are paying a fee. And the lower the time frame is, the higher the percentage of this spread and fee becomes, that by the end of the day is when it has to be deducted from your gross win of that trade. So if you're really scalping, the same rules do not apply like when you're trading, let's say, of daily charts. The game becomes totally different. What I always suggest is train yourself first, for example, on weekly or daily charts, because first of all, you have a lot less work with a lot less noise on the chart also. So the trend pictures, everything becomes much, much clearer. And you train yourself discipline. You train yourself to really wait for this one perfect, if there is something like perfect, of course, setup, or the setup that gives you the highest probability of winning that trade. Extremely difficult for me also. Personally, I have to really admit, at the moment, it's a very difficult time. Really, my patience is tested a lot, because we have, at least in crypto, this boring sideways range. If we look at Bitcoin, that we have been in for almost 1.5 months now, and it's like on some days is really, really getting me frustrated, and I'm tempted to take a trade. Actually, I did 2 or 3 mistakes because of this, because I felt like, damn it, pardon my English, I really have to do something now. It cannot be here that I'm sitting like 10 or 14 hours here on my ass in my office, not taking a trade in crypto right now. And don't fall for that trap. Difficult, but yeah, stay disciplined and wait.
Yeah, that's really hard. I mean, looking at crypto right now, it's yeah. I mean, there's just no setups for me. Like in Forex, yeah, I'm getting a few possible setups every day. But I'm like this week, I've taken two trades, but only in the Forex market. I haven't taken a trade in crypto for probably 3 weeks, I believe. And if I wouldn't be trading Forex, I would be very unprofitable, because if I didn't have Forex to trade, I would be forcing myself to take trades in crypto, because I can't just sit around for 3 weeks not taking a trade. Well, first of all, it wouldn't be profitable to do so. But so it's all about, also, what type of system do you have, and what type of market can you trade, and how many setups will you get, and that sort of stuff. But I want to kind of go back to what you talked about how you said you understand how a lot of new traders feel the need to trade, and how it's like you get into that, you want that action, and you want to get that feeling of trading and being in a trade. And if you're not trading, it feels like you're not doing anything. So I read about this this experiment they did on monkeys, where they had one monkey getting a reward every time he pressed the button, right? So he pressed the button, got a reward every time, right? Then they shut that off, right? So he pressed the button, and then he stopped getting a reward, and he stopped pressing the button, right? Now, they tried another approach where the way that he got a reward was completely random, right? So he pressed the button and he got a reward, and that would be completely random, independent on him pressing the button. And he never stopped. He never stopped pressing that button, right? Because the approach was random. Even when they stopped giving him a reward, he never stopped pressing that button. He just continued pressing that, right? And the same thing kind of works in humans, right? Because we have a tendency to be addicted to random rewards, right? And in trading, and that's exactly the same. So you have when you're a gambling addict or whatever type of addict, you're most likely kind of like addicted to some sort of random award, and that gives you a dopamine kick. The idea of like, will this be a winning trade? So you get that dopamine kick, and that's why it is so important to understand that if you have that random approach and you're getting addicted to that random reward, you're basically never going to be profitable, because you're basically trying to get that dopamine kick. So it's very important that you have that balanced approach, right? And understand that it's not about getting that random reward, it's about getting that systematic approach, right? And so going back to that, the difference between having a systematic approach and a random approach, I think it's very dangerous, right? So especially when you're scalping, and I think that's also one of the reasons why people who they look for trades on the higher time frames, they can't find one, so they go into the lower time frames and they're like, wow, there's hundreds of trades here on the lower time frames, so he's going to be trading the lower time frames all the time, right? And it's because they want to be in a trade. And the need or the feeling to want to be in a trade is exactly what's going to, hurt your profitability long term. I actually at this point in my career, I have conditioned myself to I like it more when I'm not in the trade.
Good.
Because if I'm not in the trade, I'm most likely doing something good, because you're supposed to be not trading probably 70% or 80% of your time. So if I'm not trading, the chances that I'm doing something good is higher than if I'm actually trading. So you have to kind of condition your mind to have a right approach, really.
I think that example with the monkeys, what you just described, that is what probably somebody marketing would call gamification, which is for a couple of years now this big slogan. Everybody, when you design products that are aimed of, taking space in a random system, so to say, gamification, because exactly what you just said happens. If you get a reward, you kind of think like, oh, I got a reward now this time, so I'm going to get a reward again. I'm going to win. This is also why you see so many, in Germany, when you are traveling on the Autobahn and you go to maybe get some gas at the gas station, there are always those slot machines. And you always see people playing on them, those slot machines, where the wheels are turning. When you get something like 777, you win something. And I noticed really, this is exactly like day trading, like scalping. Every now and then, the machine is going to give you a reward, because the machine wants to make sure that you continue feeding a coin, because you never know, that next spin could be the jackpot that makes you rich. And this is exactly what happens with scalping, or with trading in general, but to the extreme with scalping. You think the next trade is going to make that, damn, I lost all of my money. Okay, I'm going to deposit another 500, another 1,000, and try again. Same with Lotto, same with anything that is gamified. If you want to translate it to playing games, in essence, is what you have with loot boxes. I'm not that much of a gamer myself anymore, but I read something about loot boxes, where you have a tiny random chance that you have a great item in there, or if you want to up your chance, I think you can spend some money or something like this. It's the same principle. And do not be tricked by this principle. And one thing you can do to train yourself to at least not too much be tricked by it in the beginning is stay away from the lower time frames. Start with the higher time frames, because automatically you will force yourself to trade much, much less. And like you just said, and I have to very much agree with that, Remember, being bored and not trading is a huge part of being a trader, probably the most important part, because that means you are only taking a risk if it's worth taking the risk. If you found, the distortion in the random system that's going to give you an edge, statistically speaking.
So if you would give would give one advice, only like one advice on what we, all right, let's make it two, because one is just too little. Two advice based on what we talked about today. What would that be to new traders?
Well, most importantly, stay away from the lower time frames. Start with a daily chart. My second advice would be try, don't do it with like 100 different assets that you try to monitor. Pick yourself maybe 1, 2, or 3 different assets. Watch them on a daily time frame. Draw like where you think the trends are at the moment. And after a while, you automatically see that you kind of get the hang to what is going on in that asset. And when you have done that, then you can start, for example, adding indicators and trying to come up with a system that you think can help you to gain an edge. I know it sounds very abstract, sounds very boring, but yeah, this is the way when you learn new things. When you learn a new language, you also don't speak it already after a week. It takes a while until you get a hang with it.
Yeah, I mean, you talked about in the beginning how you should be trading like you're running a business, and it's the same thing here. You have to have an approach and a business mindset. So I'm currently working on my business, and it's not always fun. I'm just working, making plans and doing this. Like, it's not always fun, right? But the stuff that happens in the background that's not fun needs to happen for the fun stuff to begin, right? So when we talk about trading, it's important that you understand that all of that stuff, the boring stuff, the gathering of statistics, back testing, trying all different indicators, seeing how they work, it's not going to be very fun, but it's very fun and very rewarding when it works. When you find something that works and you create something, like I'm very proud of the system that I've developed. And it's so nice. It's such a nice feeling to have a system that you created from scratch on your own. It's like you finally made it, right? So you need to understand that it's a long way to get to that point, but when you get to that point, it's all going to be worth it. If I had two things, I would say, and I would take this from my own, on my own experience, from where everything kind of changed for me. And I believe that where everything got so much better for me was when I realized the importance of risk management and trading less. So if there's one advice, I would say to new traders, only take one trade a day. If you take one trade, if you're taking one trade, just leave that. If it's a stop out, you're not going to trade again until the next day. Same with the winner, because most of the time you need that 24 hours to reset your mind, reset your balance. If it's a winner, you're probably going to get overconfidence and you're going to be trading more. If it's a loser, you're going to start revenge trading. So you need that 24 hours to get back to
sorry,
back to normal.
I want to put this on my mental list, this term revenge trading. That sounds so great. It's a new word.
Yeah. So it's like I think that's very, very, very important, having having that risk management set in place and knowing not to trade too much. I also, before we leave, we have a question in the chat here, and I think it's we could quickly go through this, because it's has a little to do with what I believe is a mistake when it comes to approaching the market. So here we have a person saying, do you think more dips will come with continuation of euro rate hikes, and then when will it end, right? So I think that nobody knows. You obviously don't know, and I don't know. Nobody knows, right? So it's not a question of when will it end, right? It's more a question of just waiting and waiting for it to end, and having a plan for what to do during the downtrend, because we don't know when it's going to end. It could end in 6 months, or I don't know, like 5 years. Like, we really do not know. So do we think there's going to be more dips? Absolutely. I think there's going to be more dips. I mean, in my mind, there's no question about it. We have possibly a quite dark future ahead of us. If you look at it, like, I haven't met anyone that's bullish. I haven't met anyone that's bullish. Like, we could say that everyone's bearish, and that's probably when you're going to be looking to buy, when everyone is bearish. But I believe that everyone is bearish because the bear market is finally obvious, right?
Yeah, and this is usually the time when the bottom is in, when it becomes obvious to everybody, in my opinion. I see it a little bit different. I'm not going as far as saying I'm bullish now, but I like to look in the past at fundamental stuff. And one thing I think I've talked about this in the past here a lot also is that I noticed that once we come down from peak inflation, usually the stock market low is about to be reached. And we have come down. And if we see now, I think on the 13th of September, it's going to be the next inflation data coming out of the US. That one is even lower. I'm going to become more confident. And because I see what happened in the past there, I'm talking about the past 70 years now here, is that I'm currently slowly switching from cash into risk on assets, especially Bitcoin and especially stocks again. Because I'm not going to be able to time the bottom. Absolutely not. Nobody's going to is able to do that. If somebody tells you I'm timing the bottom, it's BS, really. That cannot be. Nobody's able to do that. And I don't know if a bottom was already in just now, or if it's going to my hypothesis at the moment is November to Q1 2023, so November 2022 or Q1 2023, when we should see slowly an uptick again. But yeah, I might be totally wrong. But because I don't know, and I'm working by my hypothesis, I'm slowly investing again. Sometimes I buy at higher prices than for Bitcoin, for example, at 23,000 or 24,000. Sometimes I get lucky and get to buy at lower prices, like right now at 20,000 or even below 20,000. I was lucky that I could fetch some at 18,000 also a couple of weeks ago. And this is how I go about it. One thing I noticed, however, is, and I just yesterday talked with a couple of ex-colleagues who are working as institutional traders for hedge funds and in the trading desks of banks, investment banks also. They are, just like you actually described just now, Lib, also very reluctant at the moment to take position because everybody's afraid that it's going to go further down. Let's see. I could be, just to wrap things up here, I could be totally wrong. Absolutely, totally wrong. But I try to offset that because I also see a tremendous chance to the upside there. Because basically this fear has been around since 2008. And I know so many people who were so reluctant of investing in stocks or in general risk on assets because they said, the central banks are printing inflation, and everything is doomed. The EU is doomed. The euro is going to fail. The US dollar is going to fail. And they maybe invested everything in gold and have like a return of 2%. Whereas it's like this. Money is in the bear market. Yeah. Of course, I'm also afraid that I could be wrong. Yeah, but what is the alternative? If I'm not wrong, if I'm right and I haven't invested, that's even worse because then I'm going to be behind the curve when it comes to investing.
Well, it's a very interesting approach. It's going to be very interesting because I'm probably like, I'm very emotional in my trading, and I'm definitely part of the herd when it comes to the trading psychology. That's why I stick to technicals basically, because I am almost like, I know that I'm always going to be very bullish at the top and very bearish at the bottom,
which is normal. Everybody is that.
Yeah, but it's like if everyone's panicking, it's like, yeah, I'm going to be panicking as well. But the psychological sentiment right now is at the bottom.
Yeah.
But I don't believe we've seen the capitulation yet. So you look at look at the financial crisis in 2008. We're not going to get that unless we have a shock to the system, a true shock to the system. And we've talked about that in the beginning. So I'm of the opinion that if we do get a proper shock to the system, which might be a prolonged energy crisis in Europe and a catastrophic energy crisis in Europe with mid to small size businesses being forced to shut down, that might be a catalyst for a longer recession and a deeper move lower. But if the situation with Ukraine and Russia and the energy crisis in Europe stabilizes, and then I think I'm more leaning towards what you're talking about, and that is the correlation with inflation topping out and equities bottoming out. That makes sense because sentiment is at I believe a low. I mean, nobody's bullish. Oh, maybe you're bullish. I don't know.
Yeah,
but
I'm
nobody
not,
else. No
I'm
one
not
else.
super bullish. I'm somewhere in between. And you know, I think I showed that last time. I have this stock market election pattern that I'm watching, which projects another low for the US stocks actually beginning of December. So I'm still waiting for that to happen, but I don't know if it's happened. That's why I'm slowly, shifting into risk on assets again. And with Europe, you probably actually are absolutely right. I'm actually trying to offset that by basing my investments more on US dollar because I'm still bullish on the US dollar in comparison to the euro, at least. Yeah.
I think we've had a good episode here today, and I think we could come back to the macro discussion in our next webinar, because it's going to be in 2 weeks, and we might have a reason to talk about the S&P 500 and that sort of stuff. We're going to have, obviously, one more weekly candle closing, and we'll see if we have created a lot can happen in 2 weeks. Let's see if we create a new low on the S&P 500, or if we're actually going to see some interesting stuff happening here. And I do like, the idea with a possible bottom happening in, I know you talked about possibly November, around the end of this year or Q1 next year. And that seems probable. It really does seem probable if they sort out the energy crisis in Europe, and they do manage to lower inflation. So it's going to be interesting to see the next CPI. I believe it's going to be the
13th of September. That's nice. It's going to be one day before our live stream. There's going to be a lot to talk about. Right?
Perfect. So if the CPI numbers comes out and inflation is lower than expected, that's going to be interesting. Yeah. All right, guys. Make sure you guys follow Dirk on PrimeXBT Academy on Twitter and YouTube, and we're looking forward to the next episode where we're going to be talking about basically what we just talked about. Thanks for joining, everyone, and thanks, Dirk. It's been a pleasure. Hope you guys are enjoying this, and hope you're gonna have a great Wednesday. All right.
Yeah. Likewise. Take care, guys, and always remember to use a stop loss.